people overestimate what they can do in a year and underestimate what they can do in 10. Just think this is a 10-year project plus that you're getting yourself into, and don't think that, there are people out there that have probably quit their jobs in 3 months or whatever through doing property, but that most people won't. So that time horizon needs to be realistic. And I think the other side is that people are just over optimistic, particularly when it comes to figures. The best investors out there will be the ones that actually downplay the figures, make sure the deal still stacks, and then get to be happy at the end when it comes out better than they thought. I had a client recently where she bought a property as her first ever when it was an HMO conversion. They had their own home and they had a property that they'd rented out as a buy-to-let, her and her husband, but they'd never done this before, and they bought this HMO property at auction, and they did all the work themselves, and then at the back end they wanted to try and get a commercial valuation on it, which we managed to do all of that, and the valuation at the back end came in like 70-80 grand higher than what we thought it was going to come in at. Because we worked out on a bricks and mortar to start with, and the whole deal still stacked on that. So I think it's when you have a range, like you said, it's really difficult to determine some of these figures, but you can usually determine a range, and you can look at a worst case scenario, and you can stress test everything. If we're looking at a development style project where someone's buying something, there's works to be done, and then we're looking at a gross development value on the back end, we'll look at the works, is that how much it's going to cost you? Or if we went out to open market tender, is that what it would cost? Have we added in a 10%, a 15%, maybe even a 20% contingency on the costs? How have we worked out a contingency on the time frame? GDV, we've got this range. Does the deal work at the very, 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 very bottom end of the range? If all of those things still stack, awesome, right? That's a deal. That is then a deal. And you can go into that feeling very confident that even if the worst should happen, it's probably going to be okay. And I think too many people, unfortunately, go into deals and they look at the top end of the range. They might speak to an estate agent who's ultimately trying to sell their services to them by giving them a really high figure. So you have to think about why people are giving you certain figures. I would say surveyors are looking at the work downside risk. The agents are trying to sell you the upside risk. So always have a look at the difference between those two. They then ultimately get disappointed. And I think the thing I see a lot is people coming and saying, I've been searching for a deal for 6 months, 9 months, 12 months, and I finally found this. And I'm like, but that isn't good enough. Don't just because you've been looking for something for ages. I mean, number one, you're probably looking in the wrong place if you're looking for 12 months and you haven't found something decent. But don't just go for a deal because I'm like, I'm tired of looking, so we'll just do this deal.
It's so funny because there's such parallels there with people and their trading. So when people get the seal of approval with us, which is basically us saying, yes, you can trade the markets live now, we think you are accurately, correctly, safely using the strategy. What tends to happen when they first get it is they kind of forget everything that we've just taught them. Hello, Kavita, good to see you. They kind of forget, and then they just want to take a trade because they're like, well, I can trade now. I've got my seal of approval. I'll just take anything that's moving. And there's a process there of learning okay, no, be patient. Only take what we actually see there as well. So I'm loving the parallels there too. There is a question come through. Remember, everybody, you can ask questions, but I'm going to ask a question beforehand. Just I'd be really interested. What would you say is kind of the state of the mortgage market in general at the moment, with everything that's going on in the world? What impact are you seeing that having? Do you have any view on when you think that may change? Why we're seeing this behavior from lenders as well, where they're pulling rates or they're changing rates overnight? I know some mortgage brokers are looking at 3xing their stress testing and things like that as well. What's your kind of take on what's going on at the moment? And maybe just give people who are maybe not so involved in property, because this will affect everybody, by the way, if you have a house or you live in a house or you rent, because it's going to impact everything. What's your kind of summary of what's going on at the moment and your take on what's going on at the moment?
Yeah, that's right. Summary. I've got to keep this short because I can go on this for years. Look, there's something going on in the Middle East at the moment. If you haven't looked at your TV recently, it might be worth it. Even if it's just for the quips that Donald Trump's coming up with at the moment to entertain you over dinner. But as a result, it's creating a supply chain issue when it comes to oil. Oil is a probably the world's most sought after commodity, and as a result, it's having a massive impact on every single country's kind of economic outlook. It's had a very quick, because of course, as we know, Donald Trump surprised everyone with it. Made some little messages about that recently. That was funny. But he surprised everyone with this in what we didn't know. And I think surprise and shock are things that the economic markets do not like. When it comes to lending, a lot of lenders, particularly in the mortgage side of things, don't actually lend their own money. They lend other people's money. And as a result, there are background systems in place to determine kind of what the charges should be for big JP Morgan type institutions at the top that are filtering this money into the market. Like, how much will it cost this bank here to borrow from that bank up there? And these are called swap rates or SONIA rates. And essentially, the more they fluctuate, so the more disturbances there are to financial markets, the harder it is for Bank B down here, who's borrowing from Bank A up there, to determine what that cost is likely to be. If it gets too volatile, that's when they would potentially just pull rates temporarily and go, let's just see where everything lies over the next day or so. Let the dust settle, so to speak. And some will just go, right, we're just going to have to increase our rates to incorporate that volatility. One thing that a lot of people don't know about just borrowing money in general, because this can be the same when buying your own home and that sort of stuff, is mortgage lenders don't actually, the cost of the money that they're lending to you, if they are borrowing from somebody else, isn't solidified until they actually lend it to you a lot of the time. So if you think that the average transaction in terms of purchasing a home for yourself in the UK at the moment is probably like 4 to 6 months, these lenders have got to determine in 6 months' time what the cost of that finance is going to be. And that's why a lot of the time lending can be substantially more than maybe what the base rate would be. So that's kind of the reasons why recently we've had a lot of volatility in the mortgage market. But as I say all the time, it's one of my little phrases I like to use, that interest rates are temporary, the deal is permanent. The purchase price is permanent. So when you're looking at these kind of deals, I wouldn't not do deals because you don't want to be spending X amount on, or you don't like the idea of spending a lot of money on funds for that project. Ultimately, if the deal still works and the cost of the funds have gone up and the deal still works really, really well, it's still a deal. Yeah. So don't be put off and don't sort of not do that. And I think we're seeing that at the moment. We're seeing that the market, the property market in the UK has certainly taken a hit so far this year. I definitely have been seeing property. I mean, I live up in the West Midlands, and I'm definitely seeing property prices go down in our area. But that represents such an amazing opportunity for investors because funds are still available. Particularly if you're looking at property projects, like a lot of our clients are looking for. They're looking for something to convert into something else. A block of flats to convert. An office block to convert into flats. Some land to build houses on, a family home to convert into an HMO, something like that. Those opportunities are massive because you're still adding this value. So I think the economic outlook is not amazing especially in the UK. I'm not political in terms of I'm a staunch conservative supporter or whatever. I just want a government that's best for what I think is best for the UK, and also selfishly what's going to be best for me personally as a business owner. And the people that are in charge right now, I don't think are doing the best for both, which frustrates me. As we said off air, it's just upsetting a little bit, I think, more than anything else. So, but we still have a strong enough economy, and the UK is still a strong enough country and has enough opportunity to be able to break out of whatever is going on. And still become a success for yourself, or you could do what Lewis does and actually break away and just go and live in another country. But yeah, I think the economy is the economy, and what we're told is probably actually very far from the truth a lot of the time. Anyway, for me, it's always about just seeking out the opportunities and taking the responsibility into your own hands to do what's best for you, right?